I had been trading and investing for a few years with some success. Yes, I had my share of ups and downs. Everywhere I'd look, I'd get conflicting advice, so many opinions on social media, financial news pundits, newsletters, trading gurus, analysts, all saying different things about the same issue. It was hard to know who to trust. But then I discovered QuantDirection and put my trust in the data. No opinions. It helped me predict future price moves by seeing into the past, and that has changed everything for me and my family.
Hello and welcome to the Let's Get Started webinar. If you've just become a new member or you're an existing member looking to refresh your skills on the QuantDirection platform, you're in the right place. Hi, I'm Cliff Young, founder of QuantDirection. It's truly my pleasure to help you get started using the platform. QuantDirection began in 2018 as a research project and was launched in 2022 as a commercial service for retail traders. With thousands of subscribers, we've continued to refine the user experience with the goal of making the platform easier to use and more powerful. Today, I'm going to take you through step by step how to use the platform. We've decided to do this as a recorded video, so you could pause and rewind as needed or skip through any parts you already know. If you've already signed up for trade alerts, you'll start receiving them on the very next trading day. And if you're a premium plan member, then all the features we describe will be available for you to use. Free plan users will also receive some trade alerts and some reporting on those alerts, just no ability to manage or add alerts. Still, this video will be helpful to you in learning how to read current trade alerts on the Trade Alert Report and to understand the historical performance reports. First, you should know that you don't have to do anything to begin realizing the value of QuantDirection. That's because based on your sign-up, you'll receive a default package of trade alerts sent to your email or to your text message. By using the platform, you can refine those alerts you receive to be most relevant, and you can better evaluate which alerts you want to trade on. You can also change how you're notified for these trade alerts. Unlike most trade alert services, we don't just send you a one-size-fits-all alert or two for the day. We want you to have alerts on those price moves that best fit your strategies. So under the premium plan, you can receive dozens of alerts each day right out of the box, and you can choose from literally thousands of price condition options to be alerted on. And yet there are many more that you may prefer to add or replace than that initial set that you have now. So as we get started, let's first define what we mean by the QuantDirection platform. QuantDirection leverages a variety of technologies, including AI, machine learning, cloud services, and many web and data services, along with our proprietary price mapping algorithms. We do this to find patterns in price behavior and then to forecast probabilities of their future price movements. We leverage purpose-built applications to determine which patterns are in play and then bring those signals to you depending on your requested preferences and in the manner that you want them. So we deliver all of this as an integrated, easy-to-use subscription service. So although underneath the hood you can see there's a lot going on, we do the heavy lifting for you by integrating all these various pieces and parts and presenting it as an easy-to-use platform. So all that's left to you to do is just learn how to take full advantage of the QuantDirection platform. So first, let's log into the platform. Now, when you signed up, you created an account and you selected a username and password. You were emailed a welcome email that looks like this. and it includes your username. Now, if you forgot your password, no problem. You can go to Reset Password under My Account, which you can get to from your dashboard or right from the home page. And then you can enter your username that you see on your welcome email and then change your password. So I hope you've logged in at this point. If not, let me pause here for just a few more seconds so you can log in, because I'd like you to do this with me. As you log in now, you should see the dashboard light. This is the default dashboard for new users. There's also Dashboard Pro, and you can switch back and forth between them. And you can also make Dashboard Pro your default dashboard once you log in instead of Dashboard Lite. We'll do that under Preferences, and I'll show you how to do that in a moment. But the difference between the two dashboards is how they navigate. Both have the same platform features, but Dashboard Lite is a little bit more intuitive, but it requires a few more clicks. Whereas Dashboard Pro is more efficient, but it requires a bit more familiarity with where you want to go. So play with them. You can switch back and forth anytime. But for now, we'll stick with Dashboard Lite. As you can see, there are four main areas in Dashboard Lite: Alerts, Discover, Analyze, and Support. We're going to spend most of our time today in Alerts. But first, let me just tell you about the other sections. Under Discover, there are tools you can use to find price conditions that may be interesting to you, to trade on, or to watch, and you can set alerts on these for the future. While you don't have to understand the price mapping algorithm or how it works to use our trade alerts, you can view the price zones we use and where price is relative to the weekly expected moves we use in our price mapping algorithm and the related price zones in real time on our price zone charts. There's a separate video on understanding price mapping in the knowledge base, and it will give you an understanding of zone levels and how we do mapping to create predictable price correlations that we base our probabilities on. And I'd encourage you to watch that. It's only about 5 minutes. It'll give you a little bit better understanding. If you want to go deeper, you can read more about the methods that we use in my book, Quantitative Directional Trading. And a link to that book should be in your welcome email, or you can purchase it on Amazon. Another tool is Search, where you can find any individual price condition, and then you can also customize the underlying data set for any price condition. So typically when we send you an alert, we base the probabilities on 5 years of data, but you can customize that data set to any date range you like, or any volatility range. So a little bit more on this later when we review alert details. Finally, there's an analytics module, which is a strategy tool. If you're wondering which groups of price conditions have the highest price correlations, like by symbol or day of the week or trade period, you can gain insights here. This looks at the big picture and may help you to define a new strategy, something that you may want to add to your existing strategies. So analytics can give you ideas on alternate symbols, trade periods, or different trade strategies that you may want to work off of. And of course, the support section, just what it says. The knowledge base has articles, videos, frequently asked questions, glossary of definitions. There's convenient numbers to contact us, chat, and so forth. For now, let's really focus on learning how to get most out of the trade alerts. So based on your sign up, you'll already receive a default package of trade alerts. These trade alerts will automatically be sent to your email and/or by SMS, text message, depending on what you selected when you signed up. And they'll all appear in a single view report called your trade alert report. And there will be a lot of them right from the beginning. So why so many, you ask? Well, because we track thousands of possible price conditions, and there are many different trade preferences that people have. So this is a starting point. You can always customize for the types of price conditions that best suit your trading style and your risk preference. By using the platform to this effect, you gain much more control over which alerts you receive and how you receive them, and how you can view them and analyze the price conditions. So that's what we're going to show you in this video. So the first thing you're going to want to do is to set your global alert preferences. This is for premium plan members, but it will apply to everything you do generically, like which dashboard you receive when you log in, what kinds of notifications you get for alerts, and so forth. So let's go there now. So the first thing is you're going to want to set your time zone. This will enable all alerts on your report to show your local time zone for when they're issued and when targets are reached. The default is Eastern Standard Time. And so free users will see it in Eastern Standard Time. And if you are in Eastern Standard Time, you can leave it just as it is. Next, let's set your other preferences. So Dashboard Lite is the default, but you can change to Dashboard Pro here, so that when you log in, that's your automatic dashboard. Trade Alerts Active is your global on-off switch for receiving all alerts. So when this is off, you won't receive alerts anywhere, not via email, text, or even on your dashboard under the Trade Alert report. But when it's on, it will send you everything that you've been configured for. So this is great for when you go on vacation or when you just don't want to receive alerts for any period of time. You can simply just go into alert preferences, uncheck this, and then it will pause all of your alerts for that period. When you want to resume, just check it back and you're good to go. Next, we're going to select whether you want email or text. So by default, any alert that you receive, you're going to get on the Trade Alert report. And so when you log in, you'll see all of those alerts. But if you want notifications via email and or text, simply just check these boxes. So again, when you signed up, you selected likely one or the other, and you'll see that selection here. We don't recommend selecting both because that's duplicative and it's just distracting. And in fact, we recommend that if you want notifications and you have a smartphone, use email, because email is just as fast as text message or faster. And the email formatting is easier to read, it's easier to link from, and it's going to have more complete information than text messages. Again, you don't want both because it will just be duplicative and distracting. For the rest of the global alert preferences, you probably want to just leave the defaults as they are. So we're going to move past that, but if you want to go deeper into some of these other settings, you can view our video, How to Modify Your Alert Preferences, and you'll find that in the knowledge base. But let's be sure to save these changes by clicking on Update. Now, some background briefly on how we select these trade alerts. So to understand this, let's imagine a price chart. Here we're looking at the ETF of the Russell 2000 called IWM. So a price condition is where we take price action and we make a snapshot of the price movement. And in fact, we have over 800 of these unique price snapshots we call price conditions for each of the symbols that we track. So a price condition will always have a beginning time and an ending time and price levels, and it will have a duration. So each price condition will have a unique number. And then we track each of these 800 or so conditions across these 12 symbols over a 5-year period of time. And we look for patterns. Many of the price conditions that we investigate show random behavior, or they show very little correlation, meaning their propensity to repeat reliably is low. And generally, we discard these conditions. And we focus on those that have very high correlation, a high propensity to repeat. And so each of these conditions is an algorithm that we deploy in software, and it looks much like an if-then statement. For example, if IWM price opens above a certain zone level on Monday, then it will close above a certain zone level on Friday. Or if IWM price opens above a certain zone level on Tuesday, then the intraday price will be 1% above the open price. So each one of these conditions has an if part and a then part. Then what happens is our system looks across all these different price conditions during the market time, and it finds which ones are currently in play, meaning the if part of the statement is actually true. So in this case, it's Monday, and IWM price did open above that level. And then if the member happens to have subscribed to this particular price condition, and they have selected the IWM symbol, then in this case, they would be sent a signal, an alert signal. And they would see that on their trade alert report. And if they subscribe to email or SMS, they would also get a notification. And each of these conditions that are eligible to be alerted on, that are selected by the member, are available and visible in that member's alert queue. And those can be seen under Manage Alerts, where you can customize them. You can customize how you receive them. You can pause any individual alert, or you can delete them. Now, from your dashboard, you can click on Alerts and then Reports. And you'll find there are essentially two types of reports. There are current reports and past alerts. So past alerts are for performance reporting. Current alerts will show all alerts for the current week, as well as any alerts from past weeks that are still active. So all alerts that you receive are displayed here in the Trade Alert report, and they're displayed with the latest alert on top. The beauty of this format is that you can see all alerts on one screen, and then you can drill down into the details. And you can filter these alerts to focus on those that you need to at the time needed. This allows you to have more price conditions versus less, because you can change your focus as needed depending on what time of day it is, what day of the week it is, what particular strategy that you're looking to deploy. So for example, let's say that you're trading intraday as well as other time periods. But because intraday trades tend to move faster. Maybe you're doing some scalping first thing in the morning. And some symbols even move faster than others because of their volatility. You can choose to view those trade opportunities first. To do that, you would filter by intraday and then the symbols you want to see. And you can also filter by active to see only those that are still active. Or let's say it's Thursday and you want to go back and view any alert that was sent this week, say on Monday, that might still be active. Perhaps these are alerts that are 1 week trade period that you've selected. Just select 1 week, trading week, and active, and you'll see all of those alerts. Now, in this report, you may find alerts you don't want. So no worries. You can stop getting those alerts by going to Manage Alerts and removing them. If it's a single alert, you can just enter the condition number and symbol, click Search, and then you'll see it in your alert queue. You can then select it and either make it inactive or delete it. Or you may want it on your report, but you don't want to get a notification via email on that alert. So you can select it, click Edit, and then uncheck the email. And the current status of every alert is displayed under Manage Alerts. So for example, if you see there's no email or text here, but it is active, so it will go onto the trade alert report when it triggers, but you won't get a notification of this particular alert. Now, I can also do the same thing for a group of alerts. So let's say, for example, that I like intraday, but I don't want any percentage moves of just 0.2% because they move too fast, especially for Tesla and NVIDIA. So I want to eliminate all Tesla and NVIDIA intraday alerts that have percentage moves that are 0.2%. I can select Tesla and NVIDIA and 0.2% percentage moves. And then all of these related price conditions that I'm eligible to be alerted on will appear in my alert queue. And I can click on Select All and then deactivate them by unchecking Alert Active. Now, that won't delete them. It'll just put them in inactive status. So I won't receive any alerts on them. I won't see them even in my trade alert report. But if I decide to make them active later, I can recheck that box. So on making any change, remember to click Update. And in this case now, you'll see this group of alerts will show as inactive. And so if I want to retrieve them, I'm just going to select from my inactive, and they will appear below. And of course, to reverse the process and make them active again, you just do the same thing we just did. Now, once you have your alert queue managed, meaning you don't have alerts in there that you don't want, you may want to add new alerts. You can do that under Add Alerts. This will add new price conditions into your alert queue that will wait for the right market conditions and then send you an alert signal. But again, I recommend that before you add any new alerts, it's important to go through your alert queue and remove or make inactive any conditions you don't want to be alerted on. Reason is that it makes it easier to do the fine tuning when you have fewer price conditions to sort through. Now, to add new alerts, just click on the menu, Add Alerts, and you're taken to a profile from where you can select any or all of the various options listed. So you'll find that the first two questions really kind of get at the same issue, which is what is the time frame or the trade period that you like to hold your trades. Reason why we have two questions getting at that is because people think about their holding periods in different ways. Some people think in terms of scalping or momentum or trend or swing trading for their time periods, and that's fine. And we like to think about more precise definitions because for some people, a swing trade is 2 weeks. Some people, it's 3 days. Whereas with our definitions, they're very cut and dry. And so you're more likely, if you use those definitions, to get the price conditions that you're thinking of. So for intraday, we define that as a price move that starts after market opens and ends before market closes on the same day. A one-day price condition is one that starts at market open and ends at market close, whereas multi-day conditions are longer than a one-day trade, but not as long as a full trading week, but they include overnight trades. A trading week trade period starts on Monday and ends on Friday, whereas a multi-week trade period is greater than 1 week, up to 6 weeks. But with any of these selections, you can make multiple selections here by holding down the Control key and clicking if you're on a PC, or the Command key and clicking for a Mac. Another optional feature here with adding alerts is that you can select price conditions by trade type. So as you probably know, there are usually multiple ways to trade any price condition. And so we're going to give you the probability of a price move. We're going to give you a price target. We're going to give you the time frame. And there are many ways you can trade that. So some may prefer to trade with futures, or some may prefer to trade with stock. And option traders can opt for naked calls or puts, doing credit spreads. With each price condition, we'll associate a trade type. So if you're using options, the benefit of using this is that you can easily exclude trades that you don't want. For example, if you pick debit calls, you won't get any bearish conditions at all. And you won't get those conditions that are best for credit spreads. But you can always leave the selection blank and then remove or pause any conditions in your alert queue that you don't want. So if you're in the mode of adding a lot of alerts, then it's probably better to leave this whole section blank and get the alerts and then fine tune them once they're in your alert queue. If you already have most of the alerts you want, but you want to add some additional ones and you're very specific, you're doing fine tuning, then this could be good for example, adding only debit calls or debit puts, or only credit call spreads, this level of fine tuning. Now, the days of the week selections give you the days that a price condition starts. So this is likely to be the day that you'll get the alert. So for example, if you don't want to receive any alerts on a Friday, then just leave Friday blank. Again, click Control and the select key, click on the mouse, I should say, to select multiple, or Command and click on a Mac. Now finally, we come to the probability levels. So you can select the minimum probability level for a condition hitting their targets. And you may ask, why select a lower probability? Why not have 100% or 95%? Well, the reason is that larger moves have lower probabilities than smaller moves, since every larger move already has a smaller move inside it. But of course, not all smaller moves have larger moves. So the benefit of going to lower probabilities is that you can get larger moves included. So this is something that you may want to, experiment with and decide what is the minimum probability level that's right for you. Of course, also, the probabilities vary depending on the volatility of the symbol. Some symbols, for example, like Tesla and NVIDIA, will have higher probabilities even with bigger moves. The maximum probability would be used for credit spreads, since those are trades we don't want the price to go to the target. So we're selecting the maximum amount of probability that we're willing to accept. Why? Because we want the trade to expire worthless. We want to know where price is not going to go. But if you're not trading credit spreads, then I would suggest keeping this at the default level, the minimum level. Now, once you've finalized your selections, just click on Select and then click on Close. Next, scroll to the top and click on the link Confirm Trade Alerts. This will take you to a checkbox where you confirm you want those alerts, and then another one where you agree to the terms and conditions. Then you'll get a confirmation page as well as an email confirmation that these additional trade alerts have been added. Once you've completed that, then these new conditions will be instantly added to your alert queue, and you'll start getting alerts on these new conditions as soon as market conditions permit. So now that we know how to customize our alerts, let's take a closer look at the alert itself. All the information you see on your email alert is contained in the Trade Alert report by selecting Current Alerts. So let's go back there. Each alert has a unique alert ID, which is unique to you for every alert. So if you have any questions about a specific alert, you can reference it by the alert ID. You can email support at QuantDirection or open up a support ticket. Always reference that alert ID if you have a question about a specific alert. The alert signal includes the most critical information: symbol, price target, and price direction. So for example, Apple will be $180 today. IWM intraday will be 0.2% above market open, and it will give you the target value in parentheses. The time of the alert and the current price are displayed along with the alert status. When the alert is issued, it goes into the active status. But then on any change in status, you'll see alert status changed to either target reached or expired. And then the time of that status change is shown in the status change field. When a target is reached, a notification is instantly sent to you according to your alert preferences, either via email or SMS, and the status is changed on the trade alert report. When you get an email or a SMS notification, it will also show you the timestamp of when that target was reached. Now, if you want to learn more about any alert, you can click on the alert details. This will give you more details about the trade opportunity, including trade strategy, trading guidance, depending on whether this is a futures trade, an options trade, or a stock trade. In addition, there'll be some advanced analysis, including the full price condition description. So that's the algorithm that we use in price mapping that we discussed earlier. If IWM opens on a certain price on Monday, it closes at a certain level on Friday. That full description is contained here, as well as the count of occurrences of this condition over the 5-year period. The count of occurrences is important because the higher the count, the less deviation there tends to be in the correlation value. So if a condition has occurred 200 times and it has an 80% correlation, which allows us to forecast an 80% probability, it's not going to move as much over time as another condition that might only have 40 occurrences over that 5-year period and an 80% probability. So typically, the higher the probability level and the higher the level of occurrences, the more reliable that probability forecast is going to be, the less it's going to tend to move. If you have a condition that has a lower count and a high probability, it still may be a great opportunity, but you may want to look at how that condition is done more recently to make sure that that probability is still consistent with the overall 5-year average. So the benefit of using a search is that you can look at those things. You can look at the data and narrow the data sample from a 5-year period to anything you want. So if you want to see that probability, say, based on the last 12 months of data, or you want to see what the probability is based on data with a certain volatility range, you can do that here in search. The purpose of our historical reports is to give you visibility into how your alerts are doing relative to what we forecasted, and also to allow you to compare to our alerts overall, so you can further optimize which conditions you want in your alert queue. Our reports section also offers these historical reports simply by clicking on alert performance and viewing them. So you can view 5 different reports that show how our reports are doing from slightly different perspectives. The performance detail report displays all the alerts that you've received over the past week, past 30 days, and past 60 days. And this report will compare the forecasted probability to the actual success rate. So if the success rate is the same or more than the forecasted rate, it will just show it as 100% for each individual alert. So for example, if the forecasted rate is, say, 80%, but the actual rate that you've achieved over the last 30 days is 75%, it will show 93.75% attainment of the forecasted level. And it will show that attainment for 7 days, 30 days, and 60 days. So you'll tend to see more variation over 7 days. And then by 30 days, it's going to be pretty consistent with the historical average. And by 60 days, it'll be even more consistent with the historical average. And then there's also a performance chart report, which again shows all of your alerts, but here it's aggregated by symbol. But also we compare it to the forecasted value. Because this report is aggregated, instead of comparing to what is forecasted where we max at 100%, for this report, we compare it to what is forecasted in an absolute sense. So for example, let's say that the aggregate of SPY over a 30-day time period is, say, 90%. The actual is 90%, but the forecasted is 80%. Then we'll show the aggregate percentage attainment for SPY symbol for 30 days. Again, these are just your alerts at 112.5% attainment. So this gives you some insight into which symbols are overperforming, which symbols are underperforming in the aggregate, which can help you think about your strategy in the short term as to which ones you might want to select over other ones. Next, we also have the QuantDirection target reached reports. So these are a little bit different in the sense that these include the percentage of targets that were reached for all the alerts that QuantDirection sends in the prior week and then also we have a historical report. For the prior week, we have two reports, a summary report, which breaks everything down by trade period. So by trade period, I mean time frame. So one of the charts shows all trade periods in aggregate for the prior trading week. Another shows intraday, one-day, multi-day, trading week, and multi-week. These reports are also available right after market close on Friday for that trading week. It also displays the total number of unique alerts sent for the week. And then you can click into the detailed report for any of these trade periods, and it will break down every individual alert for every time period sent during that trading week. And you can see which ones were expired, which ones were target reached, and you can also even click into the alert details. So that can give you some good insight into which alerts you may want to add that are not in your alert queue currently. And then finally, there's a chart which shows the average of all target reached alerts by trade period over the last 4 weeks. So it can give you a better sense for which trade periods are outperforming. All right, so this concludes the getting started video on learning how to use trade alerts. I hope that this has been helpful for you, and you now able to use the trade alerts, customize them, add new ones, and then leverage your reports to get the most from them, as well as to audit your alert performance. If you'd like additional support, please refer to the knowledge base. Plenty of great articles in there, frequently asked questions, as I mentioned, videos, release notes. You can always email support@QuantDirection.com with any additional questions, or open a trade ticket. We have live chat available for you as well. Best of luck on your trading success, and we'd all, as always, love hearing your feedback, so feel free to email any comments about this video or about the platform in general to us at any time, support@QuantDirection.com. Have a great trading week. All the best.